Hello guys, I'm Michael here. Today another video about the current situation on the market. So earnings expectations are still rising but slowing down as the economy is slowing down due to supply constraints, China housing crisis and the global energy crisis. The Q3 earnings, quarter 3 earnings season will be all about rising input costs and how it is driving margin pressures that could lead to many profit warnings. This is probably going to be one of the most exciting earnings season in many years. So despite growth expectations are coming down due to supply chain issues in Asia due to COVID-19 outbreaks, China's housing market crisis, and an unfolding global energy crisis. Sell-side analysts have raised their 12 months forward EPS expectation for S&P 500 by 6.3% in Q3. This is the slowest pace in expected earnings since they bottomed out in May last year. So we are coming into the Q3 earnings season with the elevated equity valuations and all-time high profits margins, and a growing list of pressure points for companies with wage pressures accelerating, supply constraints pushing up prices, and now later, high energy costs. So companies such as FedEx and Nike have already fired warning shots of rising input costs and pressure on margins. We had expected this theme to dominate the Q4 earnings release in January, but we believe Q3 earnings will be all about input costs and warnings on margins, which will surprise many investors. The rising input costs for companies operating in the physical world, we can say, will once again pressure companies in the industrial customer staples and customer discretionary sectors. And I expect digital companies to do well as they generate higher amounts of revenue and profits per energy input used, and they often deliver their services over the internet, making them more immune to the global supply disruptions. And I was also talking about that in the previous video yesterday. Essentially, another quarter that will show investors why betting on digital companies is good for returns. But it will only amplify the pressure on taxing digital companies and starve off physical companies of investments. And US Financial will drive the price action this week among the banks and investment banks. We focus on JP Morgan for the full picture and Bank of America for understanding the underlying credit dynamics and loan demand situation in the US. And Citigroup because it is interesting of its emerging market tilt. Morgan Stanley and Goldman Sachs are often not interesting given that JP Morgan Chase is most of the time a good indicator on investment banking for a quarter. Analysts expect a tough quarter for US banks quarter to quarter as activity is normalizing across consumer and commercial banking, while investment banking activity has hot run abnormally high in Q3. Key focus for banks is their outlook for interest rates and any comments on inflation and how it is impacting their customers. So, summarizing, these couple problems will be most challenging right now. First one is year-over-year comparison, because in the last year we had the economy reopenings and the boom on the market. Next is manufacturing surveys look too slow in challenging environment, and I had to mean the recent PMIs from Germany, for example, right? So next thing is employment, which continues to quickly revert to long-term norms, and the last NFPs are the best example of that. This month and the previous month, which were around more than 100,000 new jobs created. So the last thing is that liquidity, which is continue to turn negative. And another thing that you should know, guys, is that from banks' internal analysis, most of the money from stimulus checks and other benefits that were injected directly into the economy were used to pay debt. People were laid off from their jobs and had mortgages, rents, and other debt to pay. So we shouldn't be so afraid of QE tapering that much because it was not the most important driver of this post-lockdown boom. People were staying at home and the consumption was simply postponed. So that's it. Okay, now let's start talking about some stocks in particular. And to do that, let's switch to the platform or to the charts and talk about them directly. So right now we are at the screen view at the moment, and first maybe let's check How are the earnings from the most important companies? Let's check yesterday's JP Morgan. And we can see that the earnings per share and the revenue was higher than expected, which is odd because we had a spike to the downside as on the stock price. So weird situation. We'll digest in a moment where to look for the re-entry on the market or look for maybe some short opportunity. So next, let's check what was posted today. The Bank of America as well. The revenue and the earnings per share beat the expectations, beat the forecast, but the TSM, the Taiwan Semiconductor Company, which is the biggest company that produces semiconductor, which is a high shortage, a very big problem right now. Oddly, the revenue didn't meet the expectations. They missed that a bit. But yeah, we will not talk about that. This is just as a, if you would like to know that. Next thing, maybe let's switch to the JP Morgan chart. And right now I am, as you can see, the trading session is currently closed. And yeah, let's make it to the full screen. And let's maybe do most important things. Let's check for the Fibonacci tools and see where we are right now at the chart currently. So how does it look if we compare it to the prior situation? So we made it 61.8 over here, from which we bounced. And right now we are at 38 to 382. So as for the re-entry the market, I would be looking at the situation, what will happen when we reach the 50. And in the area between 50 and 60, 618 or 61.8. So that will be the crucial moment if we go down to those levels, what the price will be doing next. So that's the most important thing right now. And when the price reach those levels, I would be looking for the entry either to the upside, either to the downside. But as for the current revenue that was published, the earnings and the forecast that we also talked about JP Morgan this week or previous week about their forecast, their future prospects for the business, that if we are going down at the moment, it should be rather a small pullback or a correction instead of a bear market on those stocks, because the financials are the ones who will do the best when the interest rates will go high. So as for the levels, I would be looking at, let's make those lines a bit thicker. Let's do the second. Let's put the second one. And again, a Fibonacci. I'm not used to this tool over here. Okay. So we are looking at the levels between 155 and 158. Yeah, 158. So these are the levels in which between I would be looking for more closely to this stock, and then look for other confirmations on the chart to go either to the upside or downside. But that's more brief case, and maybe let's switch to other companies. And for example, as for So let's talk about Facebook for a moment, because we have the first issues after the whistleblower testimony, and that's a small news that, for example, Facebook right now is currently giving less and less people access to the internal company's chat, where the things are discussed, such as the safety manner during, for example, elections and stuff like that, the most important events. So you can see that they are taking actions, and it shouldn't be something weird at the moment. I think it's a right thing to do for them, right? But as for the companies, fundamentals and current situation, we were talking about. I even said a second ago. As for the tech stocks, tech companies. But let's switch to the chart for Facebook, and yeah, let's digest what is going on right now. Let's add the moving average for example. Okay, the 201, because still we are above the 200 period moving average. We bounce off that line almost to the pip, and if we take the Fibonacci to not that one, Fibonacci retracement, we are right now, we bounced off the 50 level, which is a 50% correction, and that is also a good signal that this move to the downside could potentially end here. So where to look for further targets? So other Fibonacci tool comes in hand over here, and that one is a Fibonacci Expansion. But to see, we need to zoom out the chart, and the level that we are looking for is right here, horizontal line. It's this one, 446.2, more or less. So we can have it here as for the potential next target, next move to the upside. As we talked about the fundamentals of the tech companies, so I will not go more into detail about that again. And let's switch to other companies, such as for example Netflix, which has a weird situation in Korea right now because of this the Squid Game, the Netflix show, which caused a huge internet traffic in Korea, and the Korea internet providers are now suing the Netflix because of that, because it caused some maintenance work to be done because of that, which is a silly thing. Of course, I think it's a minor issue, minor situation. It's rather we can say an interesting news rather than some serious problem, because if we also check the Netflix shares right now, where are you, Netflix? NFLX. So if we check the Netflix chart, for example, we are going higher and higher. So you can see that we are at the highest, almost at the highest point, all-time high at the moment. And so you're probably wondering when we will stop. So again, let's digest that with the Fibonacci tools. And so Fibonacci, let's take the Fibonacci extension first. I don't know if you like this tool, but I like this tool pretty much. Many times it works. So that's the level over here, which is 679 more or less. It basically, this Fibonacci expansion tool basically measures you the AB equals CD formation, more or less. So that is, it calls also one-to-one strategy, where, for example, I also was talking about many times on this channel, but yeah, let's talk about it again. So basically, if we measure the straight correction, so on this move, the wave AB, A here, B here, needs to be equal to the wave C and D, and from that moment the price should reverse, or at least should make a significant pullback or a correction even. So that is basically what is this tool for. And if we take the other Fibonacci tool, which is a Fibonacci correction or retracement, depending on the platform you are, if we measure the current pullback, so we can see right here it is a golden number, golden ratio number, 1.618. It shouldn't be a surprise that we bounced from here, because it is the strongest Fibonacci number. So yeah, that is as for the Netflix chart. And yeah, as for the fundamentals, the same situation. It is a tech company with high margin. So as for the fundamentals of the tech companies, I was talking about a minute ago. So now let's switch to Moderna, which, for example, give me a second. Where do I have this? Over here, where we have the information that FDA says no for a booster injection from Moderna. So that is one of the biggest blows for this company. But as for the fundamentals, we were talking about that they have also ongoing contracts and orders, and as for the at least midterm earnings, midterm revenue, there shouldn't be a bigger problem. But yes, that might push the price to the downside, and at least cause some problems in order to for the price to go up. And as for the current situation on the chart, let's measure it, of course, again with the Fibo tools, Fibo correction, from where we started this move and where we are right now. So if we check the Fibonacci retracement, Fibonacci correction, we see that right now we are also struggling with the 61.8 number. And yeah, after breaking this level, we should be looking for some confirmation, retest, and then continuation of the move. But let's also check the other Fibonacci tool, which is Fibonacci Expansion, because it looks like ABCD move, and yeah, it is also we have it on and it is also visible on the chart that we have the ABCD move, and from here we should start going to the upside. The same situation as we discussed on previous charts. And so let's measure again this move over here. This fall over here. Yes, it is correct. We bounced off 17.8.6 over here, and from which we fell. So yeah, it is I think there are enough confirmations that from that moment we should go at least in the midterm, to the upside. So that's for the technicals of the Moderna. Okay, the next would be Nvidia, which is also in our portfolio project, and right now it is on the green side, 28 euros on plus. But now let's go for the chart and see what is going on currently. And yeah, let's analyze it from the beginning. So first, the thing that we can see is this head and shoulders chart pattern. And that's the first thing. Let's zoom in. That's the first that comes in mind when I look for the chart. The second thing that comes in mind, that this chart pattern is created on very strong support. So if we combine that, the head and shoulder is being created, the inverse head and shoulder, the reversal pattern is being created on a very strong support. Therefore, there is a high probability that it will work. And currently, that's what is happening right now. The second thing, let's again, as the previous examples, let's measure with the Fibonacci tools this current wave that started this whole move. So from the notch to the notch. Okay, and we see also that we bounced off the 78.6 retracement level. So most likely it is at 50. Yeah, so it looks like this is a harmonic pattern, classical harmonic pattern with the point D on the 78.6 level, from which we should start going to the upside. So maybe let's go further with the measurement and yeah, check this correction if it is maybe 1-to-1 AB equals CD move. So let's go with the expansion tool. Almost, we can say, we started, that was the top. We went down over here, and here is the upper side. So it is more or less, it's not an ideal, but let's measure again with the retracement this move. Weird, because here the proportion are good. We started falling from 78.6, but we just didn't stop at accurately at the 1-to-1 level. So which means that this wave over here, this first pullback, is not equal to this pullback. So again, let's measure it. I will show you. You see that we went a little bit further than this. We should start over here. So that would be another indication for the upside move. It is not accurate, it's not ideal, but we have plenty others. We have plenty other options like this harmonic pattern and inverse head and shoulders. So that would be all for this video. Thank you for watching, and see you in the next one. Take care, bye.